Hi, it's Steve and Joe from Fresh Agenda. And Steve, this week we're just having a bit of a look at how much milk there might be around for the second half of 2020 and what trade is looking like to balance it all.
Okay. We've seen, just firstly calling out Nick Cave's birthday, which is important. You forgot to mention that.
Okay, fanboy.
But I will. Happy birthday, Nick. I'm sure you're not watching. Global milk. So we've seen pretty much across the board milk supplies rising at faster rates.
Year-on-year growth, yeah.
Year-on-year growth, and that's even though nothing quite like we saw the first few months in terms of absolute numbers, but the where's it coming from is the most important, and where is it going. So most, as you can see there, we've broken up where the contributions are expected in the second half of the year based on our current outlook on milk growth, right? US and EU about the same. Percentages are a little bit different. We see the US picking up speed and Europe probably slowing a little bit in percentage terms as they go into their quieter period. And we've factored in there a healthy spring in New Zealand as well. So not a huge amount. It's adding 2 billion litres to total milk supply over that period. On the other side, though, we've also added up trade, and we'll speak a little bit more about this in detail later in this edition. But trade is also up. So adding those up, our take on the net balance is that we've been in a pretty much balanced situation in the last few months. The strong trade in July and August has helped us lift that into a net demand situation. That's after we've taken account of domestic demand. But we dip from there. And this is a rolling balance chart, but what that effectively is indicating is the stock build in the US, which is the most concerning thing, and that's mostly cheese. So, it could be a lot worse to have a pandemic.
That's right. And I mean, that's been the feature of this year that, firstly, we haven't gone into this with a whole lot of product as a market. And secondly, that trade has been remarkably resilient. And we'll have a look at why and where.
So the highlights for global trade in July's numbers, and this might be a bit old, but it's important.
Feels like ages ago.
It does, half a year. Trade was up nearly 6%. Pretty strong in milk powders. And a couple of reasons for that. Butterfat sort of put their foot off the brake again in terms of the buyers there. But
big reversal there for AMF.
Yeah, that's right. The big regions for trade in this period, I think a big chunk of the total milk solids in July went into North Africa, went to Algeria with a couple of tenders. That was a big chunk of the growth. But also we've seen a resurgence in Southeast Asia in the last few months. Yeah. Which is pretty critical to the outlook from here.
Yeah, this is interesting. We just got a couple of charts there that talk about the trend in S&P exports over time, and it's been a fairly steady increase, but around that trend line, just dependent on price. So
pretty sensitive to prices. So the affordability becomes more the relevant issue here, doesn't it? As you can see, the prices have been falling in US dollar terms, so that's brought on this resurgence from a peak a few months ago when prices were very high.
Sure.
But at a country level, it's quite varied.
Yeah.
So what we do in our outlook work, and we're in the middle of doing the third quarter outlook now, is look at this question of affordability. So while we've got falling US dollar prices to now, we see them rising at this point because of where futures markets have gone and a tightening of supply. We've put this up before, but here's a better way of explaining it. We think that when you look at the relativity of the landed price in the destination currency to what they've bought, where they are in terms of volumes, this represents a simpler way saying that the higher they are in this chart, the more sensitive they are to where prices are going in the forward months, where the market is. And that takes account of that currency shift.
So that's basically saying they haven't bought a whole lot of product in this territory where this affordability rate is.
Yeah. So the higher the percentage, the more that's been So if they're to the left hand side, they have bought very little at these. Most of it's been bought above these prices. So
So they've got room to move.
There's headroom.
They've got headroom.
Yeah.
So Thailand, Philippines.
Quite a varied story. And then you compare that at the bottom to China, which is at the lower end of sensitivity at the moment. So that's a good signal because while they're nothing like the demand into the combined Southeast Asia, it is an important balancing act.
Well, that's right. And that's an important one to remember. Southeast Asia doesn't get a lot of, we don't talk about it a lot, but it's more than twice the market that China is. So very important going forward.
So butterfat, on the other hand, is still the weak spot. And here's the butterfat trade. And when we see butterfat trade, we see a lot of big movements that are not really developing market. They're import-export balancing, swing countries, I guess. So taking that out and just looking at the developing world demand, that has had a few strong months, but that seems to be over, even though prices are still falling in ship terms and have gone down since that. So that's still the weak spot. Speaking of weak spots, Jo, your chart of the week.
Yeah, chart of the week. We thought we'd have a look at the US and its big fat problem. Looking at US butter stocks that have come out this week, and they're right up there, aren't they? And you're just having a look at the cream and butter multiples over there.
Yeah, the highest stocks of butter in the US for 30 years at this time of year.
Wow.
So milk is growing. It's growing strongest in the western states, and while we've seen good cream demand and cream prices from the multiples are still holding up fairly well, as we go past the summer demand for ice cream and the like, and we see that milk growing, we think this is probably going to get a bit worse, and we've already got heavy stocks.
So that cream going back to the churns and building on that again.
Yeah. So fundamentals for US butter weak. That doesn't mean the CME will fall because it rarely follows fundamentals. So, but this is an interesting one to watch, and it's probably the weakest part of the US market right now. While that, butter's been held up by retail demand. This has been good. Can that persist?
Yeah, that's a key question.
So that's probably enough from us. We will be back from a different location next week, quite different. So look forward to seeing you then.